Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, today's video is, let's start this over. Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, 2 years ago we made a prediction that came true. At this point, I'm kind of getting tired of all our predictions since the housing crash coming true.
I see.
Okay? Now, Juana, let's frame this up to them before I show them the actual video from 2 years ago. I'll even put a link to the YouTube video so you can watch it for yourself to where we told you exactly, literally exactly what's going to happen, exactly happened. Okay, before we do the video though, and we set this up for them, what was reason number 147 that the housing market was going to crash?
Oh, everybody put their houses on the market at once.
Everybody?
Okay, the investors, the hedge funds.
Okay, Wall Street companies, that was the theory. Wall Street companies would put their housing market, would take all their homes, like REOs, right?
Yes.
The REOs, so what's an REO?
Real estate owned, it's generally a home that is owned by an institution. It used to be banks, but it now can be hedge funds and other institutional investors.
And really quick, how did they sell those?
They are?
The REOs.
Okay. They sold them through real estate agents, and they sold them as onesies and twosies until the end. At the end, they bulk sold them.
Okay, but they just put them on the market.
Yes.
And they put thousands on the market, like tens of thousands. Like in Las Vegas, 60% of all the homes on the market were foreclosures.
Right. So what would happen is people like us, would get an email, a text message, and it would say, hey, you've got a new assignment. And we would have a new bank-owned home to sell. And we were very happy. Okay.
And that literally was what crashed the housing market because all these homes were flooding the market and pushing prices down, right?
Right.
So the theory was that the Wall Street hedge funds would do this. Okay? All right. And I said they wouldn't do that.
And I said how they would do it.
And Juana said how they would do it. Here is the video. It is from a video titled Wall Street Hedge Funds, or Will Wall Street Hedge Funds Crash the Housing Market? Here's the video.
And how do we apply it today? So today what we're looking at is we're looking at these institutional investors like BlackRock and others that own a lot of homes across the nation. So depending on where you are, institutional investors own 1% and change of your market, maybe all the way up to almost 10% of your market, depending on where you are. Now, if they need cash, do you think that they're going to dump a whole market, or do you think that they're going to learn from the lessons of the past and sell, a couple homes here and a couple homes there in completely different geographic areas so as to protect the rest of their investment in those markets? Because
if you have 10,000 houses to sell, you don't call 10,000 agents. You don't wait for 10,000 escrows and sign 10,000 things. You don't do that. You just call, Wall Street and go, hey, we got a block of 10,000 houses. They're in a bunch of different markets, and this is the kind of the BPO value of all the houses. So, do you want to buy them from us? And this is what we're asking. And then they just basically sign a sheet of paper, and you own all the houses, and they just like literally, it's the easiest way to sell real estate. All right. So, Juana, we were absolutely right.
Yes.
They would not just call up a bunch of real estate agents and dump the houses on the market. When they wanted to sell houses, what did you basically and I say they would do?
They would package them and they would swap them. They would say, hey, here's a bunch of homes. They're in this LLC. Pay me this much money for the LLC and it's all yours. And that's what they do. Okay,
here's the article that just came out in the Las Vegas Review-Journal. Swapping homes like stocks. Wall Street-backed firm buys 264 Valley homes in a day. Now, these purchases were not just in Vegas. They were actually all over the country. But there were 264 of them were in a day. Okay, here's a quote for the article. Miami-based investment firm Starwood Capital Group sold 264 homes in Clark County for $98 million to Dallas-based Invitation Homes, according to Clark County property records. So, Juana, just like you said, they packaged these and sold them, right?
Right.
What advantage do they have of doing that versus putting them on the market, selling them?
Oh, let me count the ways. So first of all, they get to save lots of transaction fees, which make no mistake, that is a huge amount of money, right? Okay. So they don't pay people like us. They don't pay real estate agents. They save tons of money on escrow fees, on title fees, and all kinds of fees that way. And they also probably have some positive tax consequences, which I won't get into because I am not an accountant and I don't play one on YouTube. But you can probably imagine some really good ones. And they just get to do the deal. The number one thing that really helps them is because when they still hold properties in that market, they are not negatively impact their remaining holdings. And here's what I mean by that. Because these homes are selling as one package, those values are never broken apart as individual homes, right?
Yep.
So because those homes are not individually valued on the open market, now they're not impacting the value of the remaining portfolio that they hold. So let's say that you have this home and you think that your home is worth $500,000. And let's say that in their valuation as part of this bulk sale, that home was actually valued at $450,000. But it wasn't valued at on the open market. And you never get to know what that was valued at, so it doesn't impact this home over here at $500,000. You're still in this world where this home is worth $500,000, but in the bulk sale, it was actually worth $450,000. So,
but that value doesn't actually show up in the tax record.
No, it does not.
Because it's just what there. It's literally a list of properties, and we're selling all these properties for this one amount.
Right. So it's really interesting. I haven't seen how, and you bring up a really important point as far as property tax records. So it'll be interesting to see how those property tax records get impacted next time around when everything gets reassessed on these properties that have changed hands. Will they simply grow at 3% in property tax value, or will they somehow be reassessed at some other value? I haven't seen anything about that, but it is an important thing to think about. Now, the county did get its pound of flesh as far as its $5.10 per $1,000 of value, but they got it off the bulk, right? They didn't get it off the individual properties. The county doesn't care because they got their money.
They're 0.5%.
Right. Where it becomes more interesting is down the road. Like I said, what was that property really valued at, and what will the property tax implications be down the road? That we'll have to wait and see.
Okay, here's a quote. The deal made in 3 separate transactions closed on July 18th. Property records show. The largest sale was $57.5 million for 155 homes. The second was $26.3 million for 70 homes, and the third was $14.1 million for 39. So apparently, these things are basically securitized. And securitized just means they're packaged and sold literally like stocks or securities, which was the whole idea, right? This is what I thought was really interesting. The sale is part of a much larger deal between Starwood Capital and Invitation Homes, a $650 million swap for a portfolio of close to 1,900 single-family rental homes, with a majority being in the Sun Belt, including Texas, Florida, Phoenix, Las Vegas, and Los Angeles. So they basically were buying. This is a combination of swapping homes and cashing out.
All right. Do you remember playing Monopoly? Do you remember that you wanted to line up the streets that were the same color? That's what they're doing. Is they're saying, hey, you own a yellow, I own a green, and let's swap because that way I'll have 3 yellows and you'll have 3 greens. That's what they're doing. They're trying to consolidate their holdings in a way that fits their investment goal.
Okay, here's the next quote for the article. Concerning the $98 million sale, an Invitation Homes representative said the purchase was part of a larger portfolio acquisition across multiple markets, but declined to comment further on the deal. As of the third quarter of 2023, the company had bought 2,291 homes for $854 million during the year. And this is, I think this is nationwide, not just Vegas, which includes 264 homes in the Las Vegas Valley, according to its latest earnings report. Starwood Capital declined to comment on the sale. Juana, to me, the biggest advantage of them doing this is they get the cash fast. If they need to sell the homes, right? If you're a homeowner and you need to sell your house, usually realistically the fastest you're going to get your money?
At best, 30 days.
Okay.
At best.
I mean, yes, you could do a cash sale, quick close, yada, yada, yada.
Okay, I mean, fine. So if you're doing that, just when you when you're considering the statute, I mean, they have 10 days for the sales real property disclosure. They have 5 days for the HOA resale package. So at best, under those circumstances, maybe you could do it in 2 weeks.
Right. But when you're just going, hey, here's a piece of paper, sign it, I'll give you the money, you now own these houses, yada, yada. Mm-hmm. It works a little bit differently. We don't know if because I'm sure the real estate division, like they did not use real estate agents. So it's not like the real estate division is going to go to some agent's office, knock on the door and said, we want to see the SRPD and the duties owed and all these statutory forms that, that you used in representing the clients are going to be like, we didn't have an agent, we just private party.
Okay, so in Nevada, even if it's a private party, they do have to use the SRPD.
Okay, but how do they do, 2,291 or whatever SRPDs?
They do them. That means
they probably
Nevada revised statute says that they have to do them.
I'll bet they just pencil whip them all no, NA, and they just sign them and send them over to the other person. They pencil whip it back. Isn't there an exclusion for institutions?
Actually, you're right. There is.
No, there's an exclusion. Yeah. Okay. All right. Here's another quote. They've turned these homes into collateralized rental obligations. They've collateralized them, and that's what they're doing is swapping homes like stocks for one another. Now, this is another quote, and in this quote, I completely disagree. Now, Wanda doesn't know why I disagree, so I'm going to read the quote, and then Wanda can tell you guys why she thinks I disagree. Okay, this is somebody talking about these institutions owning all these things. To me, what you'll tend to see is more people living instead of single-family homes. You'll see a higher percentage living in apartment buildings, Pingle said, noting there will be a decline in home ownership.
Okay, so tell us about your disagreement.
Okay. Yes, less homeowners will own homes because more institutions are owning homes. But that doesn't mean more people will live in apartments because, when an institution buys a house to use as a rental, who lives in it?
People.
So the total number of homes doesn't change. It's not like they buy the homes and suck them. They like a helicopter comes in and picks them up and flies them off, and there's just a big hole in the ground, right? All they're doing is somebody's still living in there. So this idea that less people would live in single family homes, it's the opposite. They want people to live in the homes because they're collecting rent for that. More people, the exact same number is zero. Whether all of the homes are owned or all of the homes are rental, if they're all occupied, it doesn't change how many people are living in single family homes. It just depends how many own it. So you're not going to have more people in apartments. This is somebody who obviously isn't thinking.
Oh, there are so many words I could use, but I'm going to refrain.
Okay. Here's another quote from the article. Large single-family landlords like Invitation and Progress first acquired inventory following the foreclosure crisis when they bought homes at discounted prices, he said. We're going to talk about that because I don't agree with that either. They've since grown primarily through acquisitions of competitor firms. As these companies settled in as landlords, they've also made bulk deals with competitor firms to grow or shed their presence in particular markets. They're essentially trading with each other to enhance the performance of their overall inventory. One, if you went out and bought a house in Summerlin for $135,000 in 2009,
I would be happy now.
Okay, but in 2009, when you were standing there looking at homes on the market, what they were selling for, did you consider it a discounted price if every other home was selling for $135,000?
In the moment, no. In the long term, yes.
Okay, then are homes today overpriced because $135,000 is clearly what they're worth? So if they were worth $135,000 back then, why aren't they worth $500,000 now? Doesn't make sense that if people are willing to pay that, that's what they're worth. But so people have this idea of overpriced, underpriced, and what the fair price should be. But I could tell you this. If you went and asked all the Crash Bros what the fair price for homes should be, and I put every MLS at their recommended price, they would literally disappear tomorrow. And they would everyone would be overbid on multiple times because their idea of what a fair price should be is actually far less than market price, right?
Well, their idea of what a fair price would be is actually under the cost of land and building. So they're not reasonable.
Right. And especially now, I don't think people understand that, you have two choices if you want to own a single family home. You buy existing home or you buy new home.
Right.
And the new home builders are more, but
They've always been more.
they've always been more. That's right. For a lot of reasons. Some of it's
that new house smell.
getting it exactly the way you want it. But it's not like a car where if you bought a car 4 years later, it's worth 40% of what you paid for it or something like that.
Right, homes are not like that.
Homes aren't really like that. In some ways, resale homes are nicer from a perspective is you already have the pool in place, you already have landscaping in place, you already have an established neighborhood. You don't that lot behind you, you don't know what's going to end up over there. Is it going to be a park or a Walmart or something like that, right? But I just think this is interesting because we started talking about this. I'm going to go find the video. I literally made a video in like 2009 or 10 where I talked about a strategy for basically buying properties in bulk and putting them in individual, units, maybe 50 properties, 200 properties, to where that paper could just be sold and transferred instead of buying properties one at a time.
Right. I mean, toward the end of the REO sales, that's what was happening. Is you had Fannie Mae and Freddie Mac. What they were doing is they were putting these bulk packages together, and they were purposely putting bulk packages together that were in multiple markets. So your bulk package would have homes in Nevada, in Arizona, in Tennessee. It would be from all over the country. So they would purposely do that to come up with. When they first started doing it, they were doing these $50 million packages.
Yeah.
Right. So they have $50 million packages. So they were mixing these properties in that way for a variety of reasons. But one of them was to actually come up with that magic $50 million price. And they would sell them that way. So it was really interesting. This was their way of kind of winding down the whole REO process and restoring calm to the regular retail market so that the downward spiral could stop.
It was kind of against so Fannie Mae's mission is home ownership for homeowners, but they knowingly sold these homes to corporations who would likely, most of them would turn into rentals.
Right. So so what Fannie Mae did and Freddie Mac did the same thing. They had, depending on the market, they had anywhere between a few days to a whole month of what they called first look. And that meant that during that period of time, only owner-occupants could purchase the property. If owner-occupants did not purchase the property within that period of time, then after that period of time was over, then investors were welcome to also participate. It didn't mean that owner-occupants couldn't buy. Of course, they could, and all things being equal, the owner-occupant would have their offer accepted over the investor, providing that the money was equal, right? But that was their way by having that first look period where only owner occupants were entertained.
So we sold the Fannie and Freddie properties. Juana was the broker on both of those. One of the only ones in the market actually to have both Fannie and Freddie. And I remember the first look guidelines. Every state in the U.S. was 15 days first look, except for Nevada, it was 30. Do you remember that? We had a 30-day first look. Everyone else had 15. But what's interesting about this is we sort of could see this was going to happen because it only makes sense that you wouldn't, if you had to get out of 1,000 properties in the market, you couldn't dump them on the market. That wouldn't make sense. It would take too long. It would be too messy. It would cost too much. The simplest thing is call up somebody, even if you're selling them at just even if they could net more money by dropping them in the market, like all 1,000 at a time, the cost of not having that cash, because they're obviously trying to do something with the cash now.
Right. There's
some opportunity to make money and they need the cash.
Well, the other thing is by doing this, like I said, they're not negatively impacting that market. And I think that's a really big piece that cannot be undervalued.
Right.
Because that was part of the reason why Fannie and Freddie did that at the end, was to wind down REOs and to protect the market, because they had sold so many homes to owner occupants again. What they didn't want to do is they didn't want to have this thing just continue and keep hurting owner occupants. So they wanted to finish this. And a good way to finish this was to have this proverbial tourniquet where they stopped putting homes in the MLS, they stopped putting them on the open market and sold them to investors. And I think that they probably had some sort of a contractual obligation to hold them for so long in order to stop this flow of properties.
Yeah.
So interesting.
Yeah.
All right. So what did you think? Did you like seeing us from way back when?
It was only 2 years.
Hey, it feels like way back when for me.
I know. We were just children back then.
Yes. So we hope you enjoyed the video. Please remember to like the video, subscribe, hit the notification bell. If you have something real estate related to share with us, please drop it in the comments. We appreciate the conversation, and we'll see you on the next video. Bye.
Bye.